When we got this case, we tried to solve this in a lot of hurry, and hence we finished solving the case 30 minutes before the deadline. But then realized that due to the hurry, we made many mistakes in the writing. So with tears in our eyes, we had to go back and correct all of those mistakes in the last 30 minutes. While doing that, we couldn't help but remember the story of the hare and the turtle. Ladies and gentlemen, we're Team Bangladesh University of Professionals, and we believe that instead of expanding rapidly like the hare, the company Finvolution should take a more turtle-like approach.
If we consider the current market situation of China, we could perceive that there has been a sharp decline of B2B business within a span of 4 years by around 83%, while the mobile payment users have increased significantly with a positive trend in the future that is likely to sustain in the future. Given the fact China is leading the way the fintech industry with around 46% of global fintech investment, ensuring greater potential for Finvolution, where the majority of the consumers are using fintech for their daily consumption habits. Afterwards, let's observe the market where we want to extend. It could be deciphered that there is a substantial potential in Singapore and Vietnam with an existing credit card market. Along with that, this has been further complemented with incentives provided by South Asian countries' governments, especially in Indonesia, to fintech firms to generate economic development that will enhance their consumers' experience. There has also been a good volume of trade between China and Vietnam, which further aligned with our expansion strategies in that particular region. Now, for our financial measurements. Now, for our next slide, please. Now, for financial measurements, we have seen certain variations. Initially, we have seen that there's an increase in revenues along with the expansion in other Chinese markets. Albeit the growth that has been the growth of revenue has not been significant compared to the bad debt loan. As from 2017 to 2018, their revenue has increased by 11%, while the loan provision has increased by 314%. Similarly, from 2018 to 2014, the bad loans has increased by 55%, while their revenue has increased by only 23%, which overall indicates that there has been a misusage of funds by consumers, and improvement in risk management is required for Finvolution. Moreover, compared to their provision for doubtful debt, the actual loan for provision losses has a difference of 14%. Similarly, their net profit margin have also decreased due to rising bad loans and rising operating expense that indicates that Finvolution need to emphasize more on operational efficiency.
Now, let's see what are the strengths, weaknesses, opportunities, and threats of Finvolution. They have established business with strong consumer base while paving their operation with AI technology. As they have already covered 97% of Chinese cities, they gained 98.5% customer satisfaction. Now, but they have lack of customer-centric innovation with a decreasing profit margin due to operational inefficiency, which can be perceived through increase in bad loan. As their success depends predominantly in data quality, little emphasis given on the transparency on their system, lack of dedicated vendor patterns for consumer products. Finvolution has huge opportunities since they already have 6 million users and their expansion region have favorable macroeconomic and market trends. Their key assets of the firm is making users and data. As they have already strong built technology, they can leverage existing technology offerings to create more revenue streams. Now about threats, there are already existing strong players in home market and regions of expansions. Finvolution might lose consumer trust by breaching cybersecurity and privacy. Now that we have analyzed the consumer, we found that Chinese consumer demand products or services to be personalized, reliable, fast, low cost, and API friendly. In Asia-Pacific market, consumer expect fintech company to have competitive fee structure to get less transaction costs. For Chinese consumers, number one factor is customer satisfaction, and number two factor is innovation. In Chinese market, 60% of loans are used for daily consumption by consumers. To satisfy these consumers, they are targeting 20 to 40 years old young entrepreneurs, SMEs, underbanked day-to-day bankers. Their stakeholders are financial product users, financial institutions, businesses, Finvolution, and government. All stakeholders must consider government satisfaction. With lots of strengths and opportunities, this established fintech company wants to broaden their existing base by setting few goals, which are they want to create an inclusion financial platform where they want to serve underbanked people, young entrepreneurs, the SMEs. They want to be more efficient, cutting down their cost in the financial process. They want to increase customer acquisition channel. They want to be a software service provider like Amazon and expand internationally. About their existing offerings, they give fintech services catered to consumers, which are cheaper, more convenient, AI-enabled, and automated trading rating. The service used by software offerings, software like Magic Mirror, Magic Bridge, smart customer service, etc. And fintech empowerment caters to business. Sell these softwares. Moving on.
Now we've seen the foundations of the firm, we've seen where they stand currently, and we've seen where they want to go. But can they go there? We believe not, and the reasons are these four issues. Firstly, in the markets where they want to expand, there is a lot of technological limitation in the underbanked, which is a lot less prevalent in the Chinese market. Secondly, there is a lack of consumer education in these new markets, such as Indonesia, such as Vietnam, where even though they have banking services, a lot of people may not know the brand or the service or what the benefits of the entire service are. As we've shown, a huge risk issue for them is the inadequate consumer risk assessment model. Even though a substantial portion of the case was spent telling us how fantastic it was, we see that the numbers tell a different story, and that is something that we need to fix. And lastly, because they want to expand into SMEs, we see that these companies and these businesses tend to have a lot of rigidity built into the business structures, which they have to overcome, especially when expanding into a new market. Okay, so we thought long and hard about what we needed to do, and we evaluated two sets of alternatives. Firstly, our expansion alternatives. What could we do? We could expand into the developed markets, which are more secure, more mature, and have educated consumer base that consume higher, and generally have a lot less regulatory hassle. However, because these markets are mature, there is incredibly high competition, and there are existing financial alternatives for the consumers, SMEs, and other parties. We could go into the developing markets, which are incredibly high growth due to the booming middle class we see in countries like Indonesia and Vietnam. They have larger portion of markets without financial alternatives, and they generally have lower competition. But the consumer base needs to be educated about these services. Regulation seems to be a lot harder in these countries, and there's inadequate digital infrastructure for many future plans that we might have. And that brings us to our third option, an option that many would consider a bit different, which is entering by specified industry in those markets. What we basically do is, rather than choose a market in itself, we choose an industry in that market to cater to and expand to. This gives us some key benefits. Firstly, because we target a specific market, specific industry, it gives us a highly specified set of problems to tackle for a highly specified set of consumers, making us able to cater a much better value proposition that appeals inherently to the business model of those institutions. We make this also solves a huge problem of our risk, which makes, because we're transacting with businesses, it is a lot less uncertainty. And most importantly, what we think is the most important consideration, because we're going into unfamiliar territory, new markets, this gives us a somewhat stable base to get market data and to understand the market while we figure it out. However, even this has some cons. That is that this, because of the nature of the strategy, it gives us smaller markets, and it requires relationship building with those firms. And it also requires us to invest in different industries specified and in different countries. Taking all these into consideration, our selected markets are trade in Vietnam, financial institutions in Singapore, and remittance and construction in Indonesia, for reasons we will further elaborate in the following slides. The second set of alternatives we wanted to look is what we wanted to do and what we actually wanted to provide for these consumers. We could cater specifically to the consumers, which have a large market, high frequency transactions, and it allows us to gather consumer data and leverage the network effect consumers have on services such as ours. However, this has shown to be incredibly high risk, and there's an incredibly high number of variables. Even in a market like China, where there is a lot more regulation and control, we've seen that bad debt goes out of control in their car model. And we believe it would be even worse in Indonesia, Vietnam, and markets which tend to be more volatile. We could cater to SMEs, which have large transactions, are easier to manage, and have less variables, are more secure. However, these have incredibly selective buying processes, and they have existing relationships with financial institutions, businesses, and so on. The third option is to cater to both in short-term and long-term segregation, which means in the short term, we would be catering to the SME market. After foundations are built, we will be catering to the consumer market. This lets us take advantage of favorable macroeconomic conditions within these markets to penetrate them easily. It allows us to circumvent consumer education issues because SMEs care about the bottom line over anything else. It also lets us get to the employees under those SMEs, organically building consumer education as we expand through SME to SME. Educating the consumer base, and it allows us to gather sustainably and reliably gather data about the market before committing fully to that market. But the cons are mostly that it takes a long time to do this, in which time frame other competitors such as Alipay and financials or even domestic competitors may arise. Taking all these into consideration, we came up with our big idea, something we think will solve all these problems: a blockchain and AI-based ecosystem developed over 3 time frames to cater to all stakeholders and facilitate expansion. We do this with our ACE model, which is apply, consolidate, and enlist. In apply phase, we cater to SMEs and actually build the foundational blockchain. In consolidate, we optimize the blockchain as well as optimize our risk assessment models back with consumers back home. And in enlist, we merge these 2 sets of data together to build a model catered to those markets in which we will be expanding to the consumer base. Firstly, the blockchain. In the blockchain, it will be one chain where all parties can be included in the financial institutions, independent credit rating agencies, and the SMEs within those individual industries. This gives them a lot of convenience, especially in administration, because of built-in trust protocols and smart contracts, which make payments and other things incredibly simple for these companies. It allows us to leverage this trust for SMEs, which tend to be distrustful of nebulous foreign corporations, and it allows us to conveniently collect data about the market and these transactions within the SME segments. Now, the things we've told you that is coming later, which markets and industries we chose and why. Firstly, in Vietnam, we chose manufacturing and trade. What we saw was that Vietnam has incredible trade relationships with a lot of countries, especially China, which accounts for a huge portion of the trade in Vietnam. If we provide a blockchain-based solution for these traders and the Chinese consumers that buy them, the Chinese businesses that buy them, this would be reduced friction between them. And because we're a Chinese company and a dominating Chinese company in the market, it puts us in a uniquely good position to give this service to the Vietnamese companies with trust. In Indonesia, what we saw was a problem that we could address was remittance and construction. A lot of people in Indonesia go to foreign countries to work and send money home. As we know, these tend to be lower income families and there is high transaction cost. By collaborating with the SMEs that actually send the labor abroad, we can we can put them as users under the SME node, and because of that, the transactions cost will be much lower. This not only gives benefits to the SME, but it also allows us to organically build consumer trust through the employees and their friends and families by educating the market indirectly. Lastly, in Singapore, financial institutions is a huge part, and they already invest heavily in neighboring markets such as Vietnam, Indonesia, Malaysia, etc. We will be facilitating, by allowing them to participate in our blockchain, we would facilitate their capital movement much easier with much less friction than they currently have. Now, both parties benefit here. SMEs get convenient access to credit and financial services. They no longer have to worry about administrative hassles such as making payments on time or loan repayments, because we'll be able to give options such as payment in progress, loan repayments, and other such things. Smart contracts build in their supply chain transactions within the transaction when they make the transactions themselves, and we give them access to a blockchain that caters to their industry specifically. So their partners, their competitors, all of them would be using a similar service, and this provides unique values to those people. In terms of innovation, it gives us a market where we can sustainably, with low risk, expand, and gives us a strong foundation we can build on which we can gather market data, optimize our model, and eventually build a foundation to further expand in those markets.
In the next step, we consolidate both the SME market and the consumer market by optimizing the blockchain, AI, and the risk assessment model. Now, we already have aggregated data about the SME market, and we can utilize the existing AI to analyze those data to further understand the SME market, their conditions, and demands to alter our services specific to the market so that Finvolution has a stronger foothold in the new regions. Now, for the consumer market, the current risk assessment model was deemed to be inefficient in the Chinese market, as previously mentioned by my teammate. And since expansion markets are more volatile, we will utilize the existing consumer base to further optimize the model and lower defaults and bad debts. And now for the long-term plan, which is in list, we plan on expanding into the foreign consumer market when we have a strong enough base built in the SME market of those countries. And also when the consumer risk assessment model is made more reliable by decreasing the margin of error by 15%. This will be done by assessing the Chinese consumer market trends and combining them with data from the SME market, thus improving the accuracy of the model. We also plan on collaborating with local e-commerce vendors and consumers in the long run. Now, the SME platform will already have a strong base by then, and we can leverage that existing platform to include vendors in it, where we will provide facilities such as automated payment procedures and also build commissions and referral structures to increase adoption. And as for the consumer end, they will get discounts and offers when they pay the collaborated vendors through our platform. Also, portfolio investment opportunities will be given relative to the loans to the consumers. And now we know that businesses and consumers consider loans very differently. A consumer first assesses if he or she has ample amount to purchase a particular product or service. Now, if yes, they directly purchase it, and if no, then they opt for taking the loan. Businesses, however, focus on the relative return and not solely the availability of capital. If a business evaluates that the relative return is more than the interest payment, then even if they have the required capital amount, they opt towards taking the loan. Now, we will use this idea to nudge the consumers to take loans from Finvolution the way businesses take loans, where they will be given the option to either directly pay to purchase a product or take a loan and have portfolio investment opportunities. This will help Finvolution to penetrate the consumer market even more and get sustainable in the long run.
Now, for our cost analysis, we have identified certain costs and its benefits, where our prominent costs are the development and implementation of blockchain with affiliation costs with different trade agencies, along with human resources costs, legal costs, and infrastructural setup costs in expanded market. This cost will ensure that we can tap into a larger market while leveraging blockchain and AI to increase our profitability through customer satisfaction and operational efficiency that will further help Finvolution to grow. Furthermore, inevitably, there would be various restrictions that we need to mitigate, which involve government obstacles in many different markets, where we'll be collaborating with the government to facilitate international market in their domestic market. Secondly, if the bad loan increases among SME and other consumer segments, then we will mitigate by distributed ledgers and keep accurate track and collaborate with SME industry specific association to reduce debt obligations. Thirdly, if there is high levels of bad loan in consumer segments, that will be tracked through large volume of data collected from blockchain and analyzed by AI to optimize our model and ensure better operational efficiency. Now, furthermore, to measure the success of our strategy, we have identified certain metrics. Initially, to industry standard for transaction is selected industry within 1.5 years. Secondly, to reach more than 8,000 SMEs within a year and reducing our bad debt loan net of margin by 15%. And lastly, after 2.5 years of collaboration, we decided to connect with 100,000 individual vendors. Now, for implementing our strategies, we have divided our timeline into three time frames. Initially, for the apply phase that will be implemented from 2021 for 1.5 years to establish that, and the second phase will be consolidated. Consolidated phase will start from 2023 for 6 months to establish and enlist. And the enlist phase is a continuous process to ensure better profitability and operational efficiency of the business. Lastly, in a nutshell, we would like to decipher that we will take advantage opportunity to penetrate into the new market and gradually facilitate consumer education that will be followed by roadmap development of solution most significant problems, while securing and hedge any way to expand into consumer market. Lastly, our aim is to create improved value proposition according to the needs of the market.
We started this presentation with the story of the hare and the turtle. We hope by the end, we've shown you that we can be the turtle that lives for 200 years and lives very well. We hope you liked our presentation. Thank you very much.
Thank you very much, Team Bangladesh. Fantastic job. We're now going to reset the timer to start with the 15-minute Q&A. I'm just looking at my colleagues now to press the button. Yes, judges, are you ready? Please fire away, ask a question.
Okay, maybe I ask a question first. According to the business case, the company got the license I think from Indonesian government. And I guess they want to just use Indonesia as the first country to expand their international exposure. From your analysis, I see you mentioned Singapore, Vietnam, and Indonesia, and also your time frame. Can you elaborate how I think you can help the company to just enter Indonesia? This is your first priority, and then what is the time frame?
Sorry, if I may answer.
Sure.
Sir, so basically in the case, there were two components that were asked of us from the expansion strategy. Firstly, it was mentioned that they got a license from the Indonesia, right, which was mentioned very clearly at the start of the case. However, when they were mentioning their goal for expansion, it mentioned Southeast Asia. So they gave examples of Vietnam, Singapore, and Indonesia specifically. So these are markets that they wanted to expand into, but Indonesia was the market that they had some kind of headway in. However, we do realize why Indonesia would be our primary motive. But because of our analysis, sir, what we saw was that under the current structures of the firm, they can expand into Indonesia in the same model that they do. They can expand into these other countries, but it won't be as profitable as it is, because as we see, year on year, their bad debt is increasing by an average of 55%, which is incredibly bad. So the model is clearly not working. So we needed time to actually fix the model before we went completely into these markets. So that cuts out mass adoption or mass marketing in the first place. In Indonesia, what we did specifically was go to one of their biggest economic contributors, which I believe is the third biggest contributor in Indonesia, which is construction and remittance. They have a very specific problem which we can solve, and a problem that the Indonesian government is also incredibly interested in solving. By solving that problem specifically, first in the Indonesian markets, it allows us to cater to a very specific need that isn't being solved. So we don't have to compete with every other financial institution because we're providing a need that isn't catered to. This also will help us build rapport with the government because it's something the government wants in Indonesia, and it will allow us to, over time, get market data before we completely commit to the market and build market-specific models and take into account market variables. The reason we expanded at the same time into Vietnam and Singapore is because A, it was also part of our goal, the goal of involution, and B, because they also had unique advantages to us expanding there. For Vietnam, it was the strong trade relations and trade with China, and for Singapore, it was the strong financial institutions. Because Indonesia, we're expanding in only one industry, it would be a very small scale expansion, which probably wouldn't justify the development of an entire blockchain platform. So because with just one infrastructural development, with this one blockchain, we can cater to all three markets. So we decided to go for all three markets at the same time.
Okay, further question for me is the time frame you mentioned, 1.5 years and then to 6 months. Is a cover simultaneously they roll out to Indonesia and also the ASEAN markets?
Sir, no, sir. They are after each other. So for the first 1.5 years, we'll be focusing specifically on the SME segments and building models with the SME segment.
To which country?
In Indonesia, Vietnam, and Singapore.
Simultaneously? Simultaneously,
yes, sir.
Okay, the blockchain, is that also now, I think, available in China, or this is your big idea to roll out to the ASEAN countries? And then the blockchain business, not yet in China yet?
Sir, the blockchain business is in China, but it's only internalized within the Chinese market.
Okay.
Sir. I hope that answers your question, sir.
Thank you.
Thank you, sir.
So just to jump in terms of the implementation plan, do you have a breakdown of how much it will cost between your apply stage, consolidated, if you're jumping into simultaneously into these markets?
Ryan, would you like to answer that?
Sure. Thank you very much. So, the cost structure that we have thought about it actually wasn't provided in the case. So we kind of assumed that our cost of developing a blockchain would be around from like if I could think about it, it's like around $50,000 to $100,000. So and the cost that will be as they have an institution where AI and blockchain are being implemented, are being researched about it. So we believe that the cost of developing the blockchain will be mitigated because they have already a structure from which has been established in 2018. in developing the blockchain, AI, and big data. So that's the kind of cost structure we have considered about the development and implementation of the blockchain.
So are there any risks that you have identified in terms of going over budget, or and if so, do you have any controls that what if these costs are not as expected and they're going to be higher?
Yes, sir. Sir, in terms of a cost structure, we expect about 100,000 to 120,000 to build the blockchain itself. But what we've seen is that when you're expanding into markets such as Indonesia, such as Vietnam, there tends to be a lot of auxiliary costs that you traditionally wouldn't consider in business. Maybe you have some local people that need some paying. Maybe you have some other vendors. Maybe you have to provide certain incentives to certain parties involved specifically within those countries. So we expect that when we start off, we expect to go over budget because the market, unless you're really in the market, you can't really tell with these volatile markets. However, in Singapore, we do expect to be on track. But in terms of Vietnam and Indonesia, we expect to go over budget. And we've talked about it. And we believe that about 30% over budget would be understandable considering the expansion. So I hope that explains it, sir.
Okay, thanks.
Yeah, maybe I could fire away another question. Alongside on cost, which of the cost item do you think would be easiest to overrun? Which would blow your budget out of the picture? And obviously, if that is the case, what would you do? In terms of readjusting a plan, implementation in terms of timetable. How would that affect your timeline, etc.?
Sure, if I may answer it. Sure. So first of all, so the costs that we have, you just go to the cost structure. Thank you. So for the cost structure, we believe that that they have already, as they're already working on developing a blockchain and AI and big data. So we believe that as the blockchain is kind of a fixed cost that has a high fixed cost at the initial stages. So if we want, then we could try to reduce the cost that will be incurred for the blockchain, as it's already being in the market and is already being developed by the company. As well as we believe that if we want, if the origination and service costs that to cater the SMEs, if we automate the whole the transaction with the SME, then we can also mitigate that particular cost of with the help of reducing the paperwork and the number of transactions that is required for SMEs. So that's the way we can mitigate our costs.
If I may add to that, sir. When we looked at the financials given to us in the case, what we saw was that the operational expenses were increasing, and a large portion of that was for the bad debt. But the second largest contributor to that was the increasing administrative cost that the firm has to face, which is a radical increase in the administrative cost. So by building the blockchain, we can automatically lower a lot of these administrative costs there. In terms of the expansion, sir, the area where we believe we could most effectively lower costs would be if we could find partners within those markets that already have the relationships that we need to build. For example, there are SME associations specifically in the industry, maybe the conglomerate of these companies. If we could collaborate with them, our costs would significantly go down.
Got it. And to take that a little further, how would you comment about the investment returns of these expansions that we're trying to move, into Southeast Asia, like in terms of cost benefits? Do you think, these new expansions will be more profitable than the existing business that we have in China? How would you come about that?
Yes, sir. Sir, to answer that, the profitability of these businesses, I can't really guarantee. However, what I can say is that the company already caters to 97% of cities in China. So the market that they are catering to, a very, very large portion of that has already been taken in by the company. So there is very little scope for them to expand. So they need to expand somewhere. Now, if we consider which is the most viable location to expand, it would be the market or the region that is growing the fastest in the world right now, which would be the Southeast Asian regions. In terms of Indonesia, Vietnam, the growth that they have, and because they're transitioning into these digital currencies and have a growing middle class, I believe that this is the next frontier for the company, and I believe this is the most logical decision for the company to expand into those markets.
Sorry if I may add a little bit with that. So as we know that as we're implementing technologies like blockchain and the AI digitization, so we can say that the initial cost would be a bit high. So our initial return might be not that much that we have expected, but after a particular period of time, we could expect a good amount of return to digitization of transactions and reducing our paperwork, so which can exceed a return on investment more than 10%, and after a particular period of time frame.
Got it. Thank you.
Sorry, I did. In terms of to my earlier question, you mentioned about over budget, right? And then you think that 30% was going to be reasonable. How are you going to cover that over budget?
Yes, sir. Sir, so what our perception, we have a very Silicon Valley perception of these kinds of expansions, right? So we believe that for these types of firms to, in the long run, be successful, what they need is a growth at all costs mindset, at least for about 5 to 10 years. So even though we have a significant amount of bad debt, the company is still incredibly profitable. It had one of the best rallies in the New York Stock Exchange a few months ago. It's flush with funds right now. So we believe that the best use of those funds would be in these markets. So that's why we think that even if it's a 30% overrun into specific markets, because the costs are relatively low, they can easily pay for it, and it would be sustainable and viable for them to pay for it.
Sorry, if I just a little bit with that. So I like the cost, the over budget that we are thinking that might occur. It can be mitigated through a continuous monitoring process or through a variance analysis. That whenever there is an over budget, we will identify the reason behind the over budget, and we will try to mitigate it with already our existing AI-based model to ensure that the over budget that have incurred can be minimized and ensure a better return has been generated.
Okay, so you're using revenue or from your AI, and then hope that will be able to cover or absorb the overcost.
Sir, that and the fact that currently there has been an influx of funding within the company itself. So that.
Okay.
Sorry, and I think as I've mentioned before, that as the initial, there might be a bit of I would say there might be a bit of a difference between the cost and revenue, but as the initial cost of the blockchain is pretty high. So, however, the over budget can be articulately offset in the future after 3 to 5 years of after 5 years of implementation of blockchain. I think that would be more profitable, and that will ensure better return for the company in the future. So the over budget that is occurring right now will ensure more return and more cash influx in the company in the future. So that's what we believe.
We have 1 minute left. Maybe time for one quick question.
Maybe from me, how comfortable I think you guys, to meet your schedule that I guess you mentioned about 1.5 years and then 6 months. I assume maybe within 2 to 3 years, how comfortable you are to just roll out your plan to Indonesia, Vietnam, and Singapore?
Sir, could you please rephrase that question? I didn't understand. Network issues.
The schedule, I think you mentioned, overall, I think it's 2 to 3 years, right, in total?
Yes.
How comfortable you are to roll out what you now propose to Indonesia, Singapore, and Vietnam?
So personally, I think we're relatively comfortable to roll this out. However, what we do think is that if we were to be realistic, the apply phase would take a longer time. 2 years about 2.1 years. This would be relatively optimistic to expect 1.5 years. This would take longer because we'd have to establish relationships with the SMEs, build the blockchain, and a lot of foundational work. So even given that, we believe that between 3 to 4 years is feasible for us to roll this out in the markets we've chosen, because we're focusing on very specific industries.
Thank you, Deep. The time is over. Thank you for your answer. Thank you, Team Bangladesh and our judges. We will now move everyone except for the judges to a waiting room. The judges will deliberate, and then we will put you back in our room to give you some immediate feedback on your presentation.
Sir.
So kindly leave the room, and we'll see you soon.
Thank you, sir. Thank you for your time.
Thank you.
For any
Thank you very much, sir.